Hey, good morning. Let's go over today's trade plan. So in the overnight session so far, we've seen a failed breakout attempt, followed by sell side being quite dominant most of the overnight session. Heading into the open, we're going to be using 35 to 37 as the micro bull bear zone. And if ES is holding above it, and we are seeing broad market strength and sustained upside momentum, then it would open the door for another breakout attempt. But if off the open, we are seeing clear-cut weakness, or as the market heads up to 40 quarter to 43 quarter, if we're seeing even just a complete lack of upside strength, then that can still be enough for responsive sellers to be active at the 40 quarter to 43 quarter. And if this market is truly bearish, then we may not even get back up into 40 quarter to 43 quarter. So off the open, we're going to be watching to see whether in real time we are seeing bearish signals supporting the overnight bias, which has been much more bearish with sell side active. But our short-term bias so far, because we are still trading within a balance, within a range, continues to be neutral. So we're going to be watching how ES responds to 35 to 37 and how the market is really setting up in real time, what the underlying internals look like, what the momentum situation looks like, with the understanding that in order for the market to break out, we are going to have to see a rising advanced decline line and the tick holding above zero and printing some decent values, at least around plus 7,800 and ideally even higher. And if we're not seeing that, then simply a lack of strength can be enough of a reason for sellers to step in, and holding below 35 to 37 and a break below 32 quarter could accelerate the downside into 26 to 28. That's an area where the market could get short-term exhausted and we can get a bit of a bounce simply because the market is a bit exhausted into it. It doesn't necessarily mean that the market has to reverse off of 26 to 28. And if we are seeing excess weakness and sustained downside momentum, then the market doesn't necessarily have to hold at 26 to 28, but in order for the market to put in a stronger breakdown, we are going to have to see excess weakness in the underlying internals and sustained downside momentum. In that case, if we are getting some decent volume as well, which would support a wider range, then perhaps we can head down into the open gap at 23, the naked VPOC at 20.5, and the 1675 to 1875 zone, at which point responsive buyers can be active yet again. So right now off the open, keep an eye on 35 to 37. I think that area is going to help us establish our short-term directional bias, and then also keep an eye on the underlying internals, the momentum situation, the relative volume, because again, even if we're going to put in a bigger move to the downside, we are going to want to see sufficient volume to support that wider range. And as long as we're seeing that and we're seeing pretty decent downside momentum, then we could be looking at a move even down into 1675 to 1875 or the naked VPOC at 20.5. At that point, buy side can step in again, and then the larger time frame support continues to be at 2107.75 to 2110.75. So those were the main thoughts heading into the open. Let's see if the sell side can maintain the control that we've seen in the overnight session, and we'll take it from there.